being optimistic for them monkeys.
Monkey banana.
I mean,
genius.
you're pretty spot on. Like that OAH definitely looked better than anything else. The thing really popped too.
Yeah.
There we go.
Were you trading it at all or no?
Me, no, because I just
Yeah.
don't believe in the goddamn sectors. But
Yeah,
if
for
I
sure.
was going to put money towards the
Whoa.
market at work, yes. Go ahead.
Dropping a GD in the first seconds of the show.
That's right.
That's how we feel about energy, monkey. We are live. Sorry, guys. It's July 17th, 9 p.m. Eastern time. It's your Monday sensation with your three brothers from three different mothers.
And fathers.
And fathers, yes. And fathers. We don't want to leave those parentals out. Bags along with JFDI and Jpiza from the Twitterverse and from the stock twits, and I don't know, we're on the YouTube. So hey, like, join, subscribe, comment, tell a friend, share it, all that. But the guys were just talking about how much they really dislike energy. Surprise, and even Nick is on the bandwagon. Nick?
Well, I mean, it's just a non-trade for me. Like, even if it does roll over, the rest of the market's in a bull market. Like, we're in an uptrend. So like I already don't trade energy names well. So it's not like I'm gonna try and put my money to work on the short side. Like it's just me. Like, it's just not my.
I'm short.
Are you? What do you?
I got short. I got short on XOM on actually something you said, right? The gap fill immediately. And the shorts were cheap, man. You could have gotten like $3 or $4 puts like a week and a half out for like 10 cents. And so it was like a no-brainer to see that it was making higher lows in this range. Didn't even get back to the 200 SMA in a death cross where the 50s now cross below the 200. All kinds of stuff that were there. I'm like, I think it was like 10 cents for the 102 puts for this week, last Thursday, or last Friday, whatever it was, last Wednesday. And it was an absolute no-brainer, and it paid over 1,000% already. So yeah, I can't really complain about the trade.
Yeah,
so I tweeted we're doing nothing but a special show of shit posting XLE the rest of the time. So if you guys want to share that, that'd be wild.
Yes.
Get on there.
But Nick, I think you brought up a very salient point, right? With so many good setups out there, why do you want to waste your time in something that, quite frankly, we've been saying for a while isn't a good setup?
Yeah, I mean, if we were, I don't know,
why make it hard, right?
Yeah, exactly. Like, I don't need it to be,
because short side always pays better because the downside moves are always more. It's like, oh crap, it's breaking down, and everyone exit, right? It's sell first, ask questions last, right? So in any scenario except for XLE over the last year, when things actually break down, they actually break down. And every moment that XLE is broken down, it's put in a green, quote unquote, put in a green bar, right? So as it did today, look at XOM, put in a green bar, right? On a pretty heavy major volume break of an area, and it's still put in a green bar. So, but when these things actually roll over, do you remember when Square and Roku initially got popped off and people were like, oh my God, it's okay, it's down like 30%. And then in January 4th, 2022 hit, and it was nonstop down straight from 260 to 90, right? So that's why people take the trade, because the downside trades are usually big payers more than the upsides.
Yeah. I feel you.
No.
There you go.
Where trade does look.
We're done shit posting XLE. It's just too hard. Energy is too hard. GPI, I think you still like OIH, right?
If I was going to be long any of these crap names, it would be OIH. Because to be honest, OIH has been so beaten up, and the chart just looks better, right? It's breaking out of an inverse head and shoulders, whatever you want to call it. It's sitting above the 50-month moving average, right? So it's doing well. Like if you look at XLE, the 50-month is actually below the 200-month. So inherently, this is still a crap trade. Sorry, I'll stop. But I like OIH better, and I've liked it since energy peaked.
The
Yeah.
OIH. And our producer Randy was saying that right as I mentioned OIH. Good looking out, Randy. I couldn't do it without you there in the chat. So thanks, man. That said, after Friday's, quite frankly, less than stellar bullish action, it seemed to be a nice rally today on Monday. I don't even know if you call it a rally.
What would you call it?
It was just an up day, right?
Yeah.
I think everyone's looking for the holy grail candle, and when you have relentless moves down like we did on Friday, that closing, you should, at this point, you should be able to identify if this is like something to worry about, or is this just zero DTE crap. And dude, if you were watching the action on Friday, it was 100% zero DTE crap, and you knew the candle that it was going to paint was nothing more than just nonsense, right? And then you look at, and then obviously what I do, which I always do, is what did Apple close at? Oh, look at Apple. It closed green. Okay. Maybe it's not so terrible, right? A $3 trillion mega cap still closed green on a day where the market's reversed.
Well, not just that. I saw a whole bunch of people this morning across Twitter and stock twits wanting puts are basically off the open.
What?
And I saw a few people out there saying puts, and
I know why.
My screen over here pretty much stayed the same color, this green. And I'm like, all right, let's see, 15 minutes, 30 minutes in, everything's still green. Why? The market is green. Why are we doing puts? And I think some people probably were contra trading, and it might have caught them.
No, I think it doesn't hurt. I think it's still at this point, maybe another few days. I still think it's a little early in general, but there's a window of weakness here. Premium is pretty cheap on the downside, so protection of a portfolio, let's say $100,000 portfolio, if you can get cheap protection on a expected pullback, then it's almost worth it, right? Like you've made money to the long side, so protect whatever positions you have. Like Nick, right? Like if you weren't such a trader and you were a bit more like long-term swing trader or whatever, then buying 1% of your total value in puts for like a month out, 2 months out wouldn't be such a stupid idea, right? So I think that's part of why a lot of people are looking at puts, because they have gotten really cheap.
Oh, maybe people were buying longer dated puts, and if so, my apologies, but it sounded to me like it was zero DTE or weeklies, and I'm like, why?
Then that's different. But you can see it, right? The VIX was green today, which means the puts that are out of 30 days out are the ones that are getting bought. Not green by a lot, but it was still green while the markets were green. So people are buying protection of now positions that they've accumulated over the last 10 months while everyone called for another low, right? So there's something to protect.
Yeah. No, I can definitely understand buying a hedge or insurance when it's cheap. I get that part. Go right ahead, GP. Sorry.
So I think what a good idea of conversation is, let's talk about some earnings.
Yeah.
We have Tesla and Netflix coming up.
Yeah.
No matter what they report, their reaction is what's going to matter. If you've been doing this just recently, they could report some of the best numbers in the world and still get sold off like crazy. Or they could look at Mew. Mew had like negative margins on their last earnings and it popped like 7% or something like that. And then immediately they sold it off. So when you see stuff like that, Nick's talked about it before, when they immediately fill the gap on the same day that it gaps up, it's exit liquidity. People are getting the hell out. So it'll be interesting to see reactions. I feel like the energy that's sitting in Netflix is going to be a reaction either to the upside or downside, but it's going to be an insane reaction while everyone's focused on Tesla.
So, yeah. Netflix. It has, what's on Wednesday?
They're both on the same day. They report at the same time.
What were you going to say, Nick?
Yeah, I could see, like, just kind of like what we've been talking about last couple of weeks in terms of kind of feeling like, perhaps the market's a little tired. Like, I could easily see, like Tesla, like same thing with like Tesla. Like, I could see these names get absolutely like smoked, which wouldn't even look that bad chart wise. Like, Tesla would look fine down to like 230, 240. Or a kind of like just a continuation of leaving people in the dust. Like, you're not going to get a chance at some of these prices again.
I personally think Tesla's probably just going to stay flat,
Sure.
and burn both sides, and then piss everyone off and rip in 3 days. Right? That's what I think. And Tesla's notorious for doing that. There's not very many quarters where it has monster moves. So
Sure.
all their numbers are already out there, right? How many vehicles they sold. The only thing that's really standing out is what's it called?
That was this big gap up, right? A couple weeks ago. Yeah.
Margins, right?
Yeah.
So if I was leaning towards earnings play, I'd probably be leaning towards Netflix more so than Tesla. I think Tesla, the way to play this is probably call calendars, right? Sell this week's calls of, like, let's say the 350s, and buy 2 months out, right? To reduce your cost. But not trading advice, just how I would think about it. But that's me.
Well,
So there you go.
I own both, so I hope they rip.
Something to look forward to in like another couple of days. We're just beginning earnings seasons. Obviously, Netflix and Tesla are major components to the tech sector, but you've got Amazon, Microsoft, Apple, you name them, they're coming, they're all coming up. And I kind of like to, if I'm going to buy, I don't necessarily do it in a run up in earnings season. And I would say Tesla's definitely had a run up. So GP, I kind of like your idea of seeing if there's a little bit of a shakeout and see if you can get some shares on a discount. But at the same time, a name like Netflix, like, it's going to drop or pop on earnings, right? And we see the channel, we see the wedge breakout here. It can keep going, but I don't feel the FOMO to have to jump in on a Netflix at 450, 2 days before the earnings call.
Yeah. And there's a lot of that, Bags, I think, and that's what's going to be the difference maker, right? It took Netflix 1, 2, 3, 4 quarters to take out 1 quarter bar. So when I say energy, I really mean that there's a lot of energy. So if it misses earnings, it's going to get destroyed.
Right.
But if it has good earnings, or good numbers, or whatever the thing that would help it go higher.
Oh, it can run into the 500s easy.
I think it can take out all-time highs this week, right? Like, that's the level of energy I'm thinking here, because if you're looking at this on a quarterly, it took so long to get back one quarter down off fundamentals actually improving, right? Their forecasted EPS and their forecasted revenue for this year is actually better than the last year by, it's almost on par for the year before, right? The revenue is actually greater by 15%, but their EPS is in line. So, and their free cash flow positive. If they've reduced headcount or cost across the board, there's a lot of stuff that can. Anyway, it's just where I think that's why I think there's power, because of how much effort it took to get to just one bar. In my opinion, is people are still accumulating, and even now, 458, that level, it just won't even get to, and that's where that's kind of like the Ackman Reed buying high and then destruction after that. So it doesn't even get there. So yeah, I don't know. I don't have any short-term options on Netflix, but
yeah, well, and we'll see. You're Mr. Volume, and volume's not screaming at me that it's a huge buy right now, but that could change before the end of the week, right? We still have 2 more weeks in the month.
Yeah.
And that volume could definitely be spiked. But we've been picking out plays, we've been picking out names that we've liked for months, even coming out of last quarter, and names that I think each of us have either traded or owned are up big percentages. And after reading The Art of Execution, thank you, GP, for the book recommendation. I recommend anyone to go read that thing. I've been looking at opportunities to be more concentrated in names, but at the same time, I haven't seen the names that I want to get out of to move into names that I want to be more concentrated in just yet. And I think part of that is because I do realize it's earnings season is already here when I finish the book. So I think that there could be opportunity depending on how an earnings session might shake out. But at the same time, like if we're going to keep grinding higher, then I don't feel a rush to have to lead the quarter into a big buying spree, basically. I mean, from just my portfolio, there's been RIVN, SOFI, Robinhood, Coin, right? Just to name a few that are really recent addition to my long-term holdings that just really ran hard. So I'm content in staying in most of those names for now and not having to feel like I need to switch out. I mean, I'm probably never going to completely dump out of Apple. I'm probably never going to completely dump out of AMD, Amazon, Google, right? Like there's names that I'm going to probably just hold because I'm in them and I've got a nice price of what I think and up significant percentages. So for me to really go into the theory of the book and be more concentrated in selective names, I got to figure out of those more recent buys that have really run hot, what do I want to get rid of? And quite frankly, I don't know if it's Rivian and Coin or SoFi.
Yeah.
So I'm kind of in a dilemma.
That Rivian volume is just, it's telling you we just getting started, right? Like it's hard to give that one up. And maybe it's capitulation volume and people are getting out. But when you have that kind of volume, especially on the back-to-back weeks, woo, it's a matter of when, if not if, right? So yeah,
Rivian has been a monster. I think everybody who's been in it for the last month and a half is very happy where Rivian's ended up. And it bounced below 27 a little bit there. I want to see it pick back up, but the volume's just too good to say the story's over. It's had its run, in my opinion. So I tweeted about Coin the other night, and I think you were on that same tweet too, that Coin's just starting. It came back to this area that it's been at in the past. And I think it can go quite a bit higher before it gets tired. That doesn't mean it's going to go straight up, but just looking at the chart, I think there's still gas in the tank, as we like to say.
So where are you? Are you a buyer on like weakness then? Where would you buy? Where are you looking to add to coin?
I'm pretty full on coin.
Okay.
I might do a trading position. I've been doing that in and out of SOFI already, but I think as long as it holds somewhere anywhere in the 90s, honestly, Nick, looked pretty good to me.
Yeah. Sounds
Like
good.
it wouldn't be the worst to me. It wouldn't be the worst thing in the world to see Coinbase sort of let all the moving averages catch up a little bit. So if it can just dilly dally between 90 and 100 for the next couple weeks, and then have a spectacular earnings, that would be just fine with me.
Yeah.
That'd be just fine with me.
Yeah. I'm in the same boat as Bags. Was already prepared while loading that I'm not looking to buy, right? Like you are in a sense chasing. It is up 100%. So
Yep.
in a month, you are at some point chasing, but not really, because you had a freaking year to build a position and you now wait for the move. So like, I don't know. Like, I don't know what you were waiting for. And now that it's gone, you're like, oh, where do I buy? You're like, well, dude, like at 50 bucks when it was there.
If you just went off the SEC report on this candle right here and picked up that low 47, 46, 43, if you picked up anywhere in there, I mean, gee whiz, like that's a good year for a lot of people.
Yeah.
Just picking up that from there to there, right? I mean, 125% in 6 weeks. It's pretty insane. Just like RIVN, as we were talking. I mean, that's an insane move in 4 weeks.
Yeah. And dude, it was an insane move down, right? Like if you're looking at like everyone's like, oh my God, this is crazy. Rivian went from coin went from 200 and what is it, 6 to 49 from end of March 2022 to May 12th 2022. So in a month it dropped 160 points and no one batted an eye, right? So I'm not saying it's going to go up 160 points in a
Lost
month.
of almost 80% in a month.
Yeah. And so like, it's like, well, this is not normal. Neither was losing 80%. So, and I get it. There was a lot of headwinds and stuff like that. But Nick, the question I have is like, are you in coin, or are you looking to get into coin, or are you just asking the question?
No, I've been kind of trading. I was trading coin, Mara and Riot kind of just pretty steadily.
Yeah.
And
And all of those were showing lots of accumulation, right? Mara, Riot, Hut, MicroStrategy, they were all showing accumulation for a while. The only one that wasn't was coin while it was basing. So
I mean, of all of them, I think coin is definitely the one I would consider working into a position. If I could get it, probably. I think I'm kind of in line with Bags. If I could get a pull in anywhere into the 90s, I'd probably bite at least. If I have cash on hand, cash available, it's
I mean,
I just don't.
Going back to SOFI, a name that I did add more to as a trading position. I basically low ticked. I think it was below $8 there. 7 something on that one. And I mean, for me, again, this is a lot of learning from Cookie over the past few years. Is really letting these moving averages catch up with each other. I mean, we've joked that, you know, Duzio says all the time, ride the huckleberries and get off the dingleberries, right? Like, this is riding the huckleberries. If your 9 EMA doesn't hold, you get to see a pretty easy stop out. And at that point, it was extended up from that. And now it's just pushing off of it on the weekly. You know, you look at the daily, same story, right? And on SoFi, like, it's just getting gassed up. And this is kind of what I want to see from coin. If I highlight it here, right, is like we just went sideways and just chopped and slopped around for a few weeks, and then you popped right back up. So, you know, once we get probably, I don't know, up into the 13s, probably I'll shed some of that trading position. But the good thing, I loaded a ton of SoFi, you know, down in the $5 area, $4 and $5 area. So I've already made my 100% on my investment. Now it's just being smart with it and returning back to the art of execution. I think that's one of the challenges that I'm going through mentally right now, is how to get concentrated, because I've got some big winners, right? And I want to let them run, but I need to trim some profit out of them. But at the same time, I don't want to go from, as you would say, Nick, down to a piker's position, right? Like a meaningless weight position just to say I own these shares.
Yeah.
So that's kind of the dilemma I'm looking at, is which ones do I want to stay in? Which ones do I want to be more concentrated in? And then which ones do I ultimately cut loose? I mean, Hood's just now finally going, right? Like, Hood's up 30 something percent in a few weeks time. I mean, that could be one easy that, you know, gets up here to the 16, 17, right? And that's from down here. That's a double. That's 100% my money. And I don't know. It's just things that I'm trying to figure out how to go about, which winners to let ride and which ones to trim out of.
Have you considered using selling calls as a way to generate cash for building other positions?
Oh yeah, I'm
Do you-
selling. I'm
Yeah.
selling a shit ton of SoFi calls. Ever since I made 100% on that, I've been selling SoFi calls almost weekly. And except for the week that I bought it back in.
Yeah.
So I'm looking 2 weeks out to a month out. It's not I was telling this to our friend Rig on Stock Twits. It's not a lot of income. Like, I'm not doing so close to the money that I feel like I'm going to get called away. I just look at it like a dividend, right? It's paying me to own the shares, and I'm doing it in a way that I don't feel like I'm heavily risked in getting called away, because I don't want to get called out of those shares.
Yeah. No, I'm saying if you want, like, in terms of where do you think on the chart, like, SoFi is gonna, it can move, right? Obviously, but where is a really good point where it's gonna need to consolidate? So, like, if you're looking at SoFi, I'd say at the at the IPO level is probably a really, that's kind of where they distributed out, like right around 14 or so.
Yep.
Right. So like right around there, I would be selling actually closer to the money calls, because getting called out there is not a bad place to be, right? And you'll get some income out of it and stuff like that. So I think that when you're talking about the concentration stuff, is like, first of all, where do you believe in the story? And second, if you believe in the story and you think this is a long-term winner, obviously stay concentrated. But if you think this is more of a short-term or, you know, medium-term or long-term swing, what's a point where it's probably going to encounter a lot of resistance?
Yeah,
and that's
for sure.
that's
And that's kind of that was kind of what I was referring to in my trading position. Like, I'll probably lighten up some up there, and I could see myself play those closer to the money strikes once you get into this chop, because, as we've said dozens of times, right, like, there's a lot of dead bodies above in some of these names, and this is one of them. You see that big volume profile once you start getting into the 14s. That doesn't mean that it won't invigorate new buyers, but that's a huge supply zone, right? That shares people who've been holding on to this from near the top. Like, okay, I feel like I'm getting out breaking even, right? And that can always be a dangerous place and mindset to be in. But at the same time, that's the reality of what it is. So those are the areas that I'm looking for, from that $13.50 up here to about $15. I feel is going to be the big resistance zone for SoFi.
Yeah, I actually just had a similar conversation with a friend who's been holding Palantir, right? And he asked me what I think he should do, and I was like, don't be the guy who sells when it gets back to break even, right? Just don't be that guy. If you want to lighten up a little bit, fine, because you've had a long-term losing position, but you're going to be pissed when, based on, I was just looking at the chart, based on the volume that's been kicking in here and not really going anywhere, while basically accumulating, right? In Palantir, it's literally gone sideways between 14 and 17 for 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks, right? So if you're going to just break it, this is the art of execution conversation, right? This is where a lot of people, and I've mentioned it a few times in the last few weeks, is like people will sell too early. This is the way. It's just human behavior. They finally get break even. They're like, yes, I'm out. There's
I'm out. I'm not holding these bags anymore. But sometimes you want to hold those bags, man. Yeah. Sometimes you want to hold those bags. Those grocery bags make you stronger.
Watch Palantir die tomorrow and he's cursing me, but that's a different conversation.
This is not financial advice. That was just a friend conversation. Shout out to Brian G, Alpha Charts. Interesting hearing your guys' voice for the first time. Well, thank you for listening, Brian. We appreciate it, and appreciate everything that you bring to the stock twants.
Brian G is listening to us now. Yeah, that's an honor.
He's listening to us for sure. Nick, what do you think about that though? In my dilemma specifically, I'm not asking you for financial advice, but how would you manage your portfolio if you were trying to get more concentrated?
I have a tendency just to let it kind of happen naturally. If I buy, like, let's say I buy a breakout, and I've tried to adopt this belief that, like, once price is trending and above, like, the major moving averages that I'm trying to pay attention to, like, I stop giving a shit what the, like, kind of individual daily candles look like. Like, you just got to let the stock kind of breathe. But if like, let's say I'm buying a breakout and on, like, let's say a nice weekly base, if the setup
here's your breakout on a nice weekly base. There you go. RIVN.
So let's just say you were buying the 15-16, right? We close here on the week and we put in a 3-week tight. All right, there's another opportunity to add a little bit more. Let price kind of trend, do what it's going to do, and, like, let's just say it continues to move sideways or breaks higher. We put in, like, another base between, like, 30 and 25. Like, just take the setups as they come, and in whichever positions, like, are working the best for you is kind of where I'm going with this. Just, I guess, kind of in my opinion, it makes it easier, less stressful, and the market is dictating what positions you should be concentrated in versus saying, okay, I like Google more than
I want to be in this versus that.
Yeah. It's kind of that's just how I would.
So first off, that's the most Nick answer ever. It's just like, let it happen naturally, man. Don't force the flow, bro.
I mean,
just let it go, man.
I mean, I used to be so you'd get I used to come up with every excuse in the book to, like, sell. So, like, I'd be in a great winner, and then I was like, oh, we put in like a, a stupid doji or whatever on the daily, and I'm like, you know, price has got to put in a, it needs to move sideways to create pivots. That's just, yeah, you're right. It is a Nick answer.
But that's all right. So for me, let me spit this back to you.
Yeah.
So in my SOFI position, right, like I'm doing a trading position that I've added on top of what I already want to hold on as my core, right? And I'm thinking about doing that with coin. That would be an area that you might not look like it as a trading position, but just continued adding to the core at good points on the chart.
Like,
Is that
yeah,
fair?
yeah.
All right. See, so that's just a different way to think about it than the way I was thinking about it, right? Because
I mean, you're taking like you're deciding ahead of time kind of what positions you want to be
Yep.
concentrated in and saying, okay, price pulls in, we hit a major level, price pulls in, we hit the 50-day or the 200-day, add a little bit more. Yeah, it's a different.
yeah.
Yeah. It's interesting. My like position lists, like it never ends up really looking quite the way that I necessarily thought they might. The more I kind of let the charts kind of work themselves, but it's just neither here nor there, just style and preference, I guess.
Yeah. No, I think that's good, right? And if I'm not saying SoFi is or isn't a name that I want to be more concentrated in, because I really haven't made up my mind on what those positions are. But maybe those opportunities I see in the future as trading positions, my perspective might be to make those my opportunities to get concentrated.
Sure.
Yeah, I like that. Wow, we're already 40 minutes in. These hours fly by. Guys, I think, and Randy brought this up just now in the chat. One of the hardest things to do, I find, is sell. It's easy to hit the buy button. Like we all see points on the chart. I think the hardest time to hit the buy button is when it feels like you're trying to catch the knife.
Disney.
Go ahead, GP.
No, Disney.
Segue.
Bryson.
Sometimes when it's uncomfortable to buy, and I tweeted this the other day, that's the right time to buy. And sometimes when you feel like, or at least I shouldn't say you, when I feel like, oh my God, I would hate to sell this. That is also a time to sell. And I'm not saying exit the position, but take something off the table. How do you guys view those in your unique scenarios of, is there that gut feeling, or is it just based on the chart? It hit the pivot, it hit the buy point, I'm hitting the trigger, or it hit my target, I'm pulling the ripcord.
See, I have the opposite, or I have had the opposite problem where I'm much quicker to sell. And so I kind of enacted
straight savage taking that profit just out.
Yeah, it's so stupid too. Like I've let such good positions go to waste because I was so quick to sell. So I enacted just like a kind of a variance to a rule where if I want to sell something, I'll sell half or a good portion of it, and I'll just raise my stop. I won't just exit a position completely.
That makes sense. I'm an options trader, and I started with trading options based on levels, and I quickly realized that I would get stopped out for 30-40%, hit my level, go right under, and then rip higher, and I'm pissed. And it happened a lot, right? When I was like, oh, these are the levels. And so the way I handle a lot of stuff is if I'm say I'm buying $1,000 trade, right? And my risk is 20%, so it's $200. I now only take positions that are $200. So I get to see it play out. And I'm not taking them randomly, I'm taking them at the same levels, but I'm letting it, I'm the position sizes are my risk from the beginning. So I'm not taking a $10,000 position and setting a 30% stop and then get hit for $3,000 and then watch it run the other way for 30 or 40 grand or whatever, you know what I mean? So that's kind of how I do it. And then as the positions start working, I usually wait for the 100% mark. I'm not the guy who's selling at a 10% clip on options plays. I'm waiting for the 60-70% to start trimming out. When it gets to 100, I want to make sure all my capital that I've initially put in is out. And obviously, if you get bigger winners right off the bat, like a gap up or something like that, it's a different story. But I tend to take out most of my capital on the first rung, and I try to do them usually in 4 rungs. It's 1, 2, 3, 4. So the first rung would be at 100% and take capital out. Second rung is at whatever the next level I see that's coming that could be potential resistance. And then if it breaks through that, like I try to figure out my resistance levels. I don't have generic resistance levels. I use a lot of, I guess, areas where human psychology hits, right? Like this Palantir level right now is like, oh my God, everyone's back to break even, sell. Nope, that's actually a good time to probably double down, right? Especially if you get a pull, like a small enough pull there, it should be shallow. If it gets to be large, then there's probably a bigger issue, but it should be a shallow pullback when it gets to there.
Sorry, GP, when you're looking at levels, you're looking at just the chart. You're not looking at the options chart, right? So you're saying, no, like,
I don't look at prices. Yeah, I used to look at prices and be tied to P&L, but I'm trying to focus. I've been focusing on just
the chart.
Yeah, just the chart, right? So I took. I'll give you an example of how the rung, if it helps. I don't know if you want me to, but I can give you an example. Right. So I took Tesla August 230 calls when Tesla was sitting at 163. And why did I think that? Because I was like, the move that I thought coming out of this was to 315. Right. So I'm like, okay, the move to 315 out of this is essentially a double. So where do I want to look? And I looked at I put an Excel spreadsheet together of all the option pricings and what's kind of the best risk reward scenario, right? I risk $3, I can make 85. So that's whatever 3,000% gain or whatever the percent is. I did at the time, and the 230s fit my kind of profile. And I was like, okay, cool. I was able, and I was pretty confident in the move, so I actually held on a little bit longer on this one. But I took out my capital as soon as I think it hit like 30 from like, I think I bought it for like $3 or $3.45 or something like that. And so as soon as it hit $30, I took out my capital, and now I have a free ride. And so now I'm watching levels to see where I can start scaling out. And so I'm probably down to about a 40% position in that stock, and I've taken out the other 60% for big monster gains. And now I can figure out how I feel about holding it into earnings, because I still have a month on those and they're already deep in the money, or getting rid of them. So I've so far already taken 4 rungs because the percentage gains were massive, so I didn't have to take. I didn't have to take gains on the first 100%. I took it at 1,000% or 800% or something like that. So it was easier to get capital out. So that's kind of how I played that. But if on some of the shorter term stuff, it's usually the 4 rungs, get out the first 100%. But I don't risk what the capital I used to, just the capital I think I can get stopped out on. So then you get a chance to play through the theory or the thesis you put together. But that's the big important part. You have to have a thesis, right? It's like, I'm buying this because I think it can go here, and what's the levels. A lot of people will buy and be like, oh, YOLO, I got 100%, I'm out, or whatever it is. And they go, oh man, this could have been 1,000%, right? And that happens.
I feel seen.
Yeah. But
Well,
to each their own,
that's
right?
how I kind of felt on Google and AMD last week. I mean, don't get me wrong, I was happy with my trades, but Google went much higher on Thursday, and I'm like, damn it. And then AMD went much higher and then reversed Friday. But profit's
That was a
profit.
nasty wick.
I try not to look back
No.
too much after I've decided on what my sell is. And usually, I mean, I know you're doing month or more out options usually. Mine are usually more short dated because that's my trading account. So it's 2 to 3 weeks, a month out at most. And I'm happy to, recycle those winnings as many times as I can. So it's a little bit different strategy. I think that we both take, and quite frankly, that's I think that's probably why I miss out on some of those bigger gains, is because I know theta is going to get me at some point. And why am I complaining at 100% gainer, or why am I complaining at a 50% gainer that I've held for a couple days?
Yep.
Nick, you were going to say something?
No, I was just saying I was on that. When you were talking about AMD, I was like, freaking wick was nasty.
Yeah, it was.
Right. I think you got to find how all of this stuff works with your personality, right? And also your schedule, right? If you're doing this as an ancillary income to your full-time job, then you got to find what works for you in that setting. And then that
You'll have time to babysit every trade.
Yeah, exactly. So you're doing the best that you can given the parameters that are set forth, and that's the best we can do. And we'll modify and we'll do the best that we can as those parameters change, right? So I think that's it's important to figure out what you want out of this first, right? Before you start. It's like, you don't want to just be a YOLO guy. You don't want to be like, I want to be the guy who's never sitting at a screen. I'm like, you have to put in the time to never be sitting on the screen again, right? So
yeah,
and that time is
C
I think
time.
it's more than the 10,000 hours that people talk about personally. I think it's a lot more than that. And also,
Yeah, you're talking about like, oh, go ahead. Sorry.
No, just one last thing, which is also bucket your stocks. Every stock has a different personality. So to say coin is going to behave like Netflix, which is going to behave like Tesla, which is going to behave like RIVN, you're not going to get the same results. So you gotta find the personalities of these stocks. That's important, in my opinion.
And it's very difficult to short-term trade a chart that you don't really know intimately. That's the reason why I called the fuck around 5, right? The Tesla, the Nvidia, Apple, SPY, QQQ. I look at those charts multiple times a week for years. So I feel like I know their personality and I know how they tend to trade. If you just go find random XYZ company, I mean, it might trade like dog crap, right? And it might not be as volatile as you expect. It might be more volatile than you expect. It takes a lot of homework, for me at least, to be comfortable just trading around short-term positions on names that I don't know or haven't looked at frequently.
Yep. I think it's an important part of the conversation, right? Like, I think I posted a chart on First Solar because Monkey was asking about it. I was like, this is the chart of First Solar. It looks so terrible right before it has a pretty large move, and then you have a pretty large move. I think it's up 10% since that, and I think most of that 10% came to. What's that?
It's up 8% today.
Yeah, so like you just have to know the personalities of charts, and I think that's an important part of these conversations. Yeah. And speaking of First Solar, this is First Solar is not a stock that goes up and up and up. It has one kind of big candle and then consolidates, and then has one big candle and consolidates. So if you're looking for First Solar to be this multi-week winner, you're most likely going to be frustrated, right? That's the personality of the stock. Once you get your bang boner bar, you're like, it's time to exit out. And then a lot of people will be
Do
like,
it again.
well, sorry, well, go ahead.
No, I was just saying, once you get that big boner bar, take it out and do it again.
Yeah, and just wait for that to set up to reoccur, because it does reoccur. And this, when you're looking at this chart, right, it's got that, it had that kind of 3 weeks tight, right at the trend line, right below the 10-week moving average, but not breaking down, wicking. So you knew it was coming, whether it was going to be this week or next week or whatever, right? But the bar was coming, and this bar here is a possibility. It reclaimed 206. 206.60 is the level I've had on this chart for the longest time, and this afternoon it closed right above that 206.60. What is that 206.60 level? That 206.60 level is a multiple highs from 2011, 2009, and 2008 and 2000. Like, it's a huge kind of level that I was looking for to reclaim today, and it did. So my thought process, maybe it has like kind of an inside candle tomorrow, but then more rippage is probably coming this week. And I would love to.
That.
What's that?
I like the sound of that.
Yeah, and so, like, to me, this gets to 248, 249 ish, which is another kind of big supply zone from way back when. But the personality of the stock will start to change as it takes out all-time highs. And why is that the case here? Because at all-time highs, you have a new set of investors coming in, new set of personalities developing. So you have to then start adjusting your kind of conversation around what's going to be happening after that, and see how it unfolds. Don't be just like, YOLO, it broke all-time highs, it's going to 1 million, whatever, right? New sets of investors come in because it's now breaking out of a 20 or 16-year base or whatever it is. So you have to see how the stock starts to act after that. It's just stuff you'll see as you do more screen time. You'll start seeing a lot more of this stuff, in my opinion.
We have flown through this hour, guys. I know there's been a lot of requests in the chat. I don't think we're going to get to many, if any of them. GP, one name that you mentioned was Disney. Had a little bit of a shit-tastic day. Could be a buying opportunity. How you feeling about Mickey here? We've talked about Mickey in the past and wanted to see it hold this
So it's official.
upper 80s area.
It's official. Minnie is divorced Mickey, right? But to me, this is a classic kind of burn you out and rip it higher setup. And I know people are gonna be like, well, it's breaking all these things. Disney's been sideways for better part of the last
Forever.
10 to 12 years, right? And what's recently changed in Disney, yet the price action is not reflecting that, right? So to me, the recent thing is the return of Bob Iger. Bob Iger was iconic. He's someone who's done really well for Disney, and you're at the levels of where it was back in 2014, 15, right before the streaming stuff started and the consolidation, the big base. So this to me feels like a rip below, and then wouldn't be surprised with a pretty solid green engulfing bar here, or maybe a doji or hammer or whatever. But I started an initial position today in some leaps, and some short-term calls, but short-term calls I'm not too worried about. I figured they're gonna, it's a placeholder for me, but the leaps are, it's not a full starter position. I mean, it's a starter position. It's not full position. But
what level would you get out? This is for either one of you. What level would you not look to buy below that sort of, what is that, 79 something there? So
So
under
this
80,
entry's on a weekly, right? So as long as it closes above what is this? The COVID lows, which was 85.98. Sorry, yeah, 85.98. I think it's a shakeout candle.
COVID lows was 79.07.
No, what was the weekly
close 85.98. Yeah, you're right.
Yeah,
85.
the weekly close was 85.98. So even though wick down to 79,
Yeah.
most of the supply zone was in that 85, 86 area. So that's why it feels like, and to be honest, the momentum on the downside is waning, even though it had a terrible day today. The volume isn't there, big capitulation volume. There's a lot of stuff that I like about this chart that if most people are looking at it, they'd be like, this is a stay away from me.
What about you, Nick? Is it a stay away from you?
Disney? Yeah.
Yeah,
Yeah, it ain't my style. I mean, if you could get like a trend line break somewhere, I'd consider maybe biting on it, but yeah.
I can draw 1,000 lines on this thing.
200 week is right there, right? Sorry, 200 month is right there. And historically on a lot of these charts, the 200 month moving average is a solid place to start buying position. It is $3 underneath, right?
200 month. All right. Now I learned something new. I don't look at the 200 month ever. I think that's a first. All right. All right, GP.
Hey, it's a starter, right? And if I'm wrong, it's not a big hit, at least down here. You know, the funny thing is I actually had the same starters about 2 or 3 weeks ago when I thought it could bounce, and then the price action was terrible, so I got out for break even. And people were like, why? It was doing well. And I was like, because I don't like the way it's looking. And then obviously it's starting to dump, and it seemed like now it obviously seems like the right move. And so once again, trying it, and if it doesn't work, it doesn't work. There's a lot of failed trades, isn't it?
Yeah, of course.
It doesn't bother me.
No, and I was more of I think for me, like, this is psychology in a way, but also respecting what's happening across the market. And several weeks ago we talked about, we think that some of these unloved names like a Disney and like a Target, they're going to have their day in the sunshine. And when is that going to be? I don't know. But at the same time, we also realize that the RIVNs, the SOFIs, the Robinhoods, the coins, they can't run forever, even though they've ran bigly already. So sometimes it's worth taking a look at specific laggards in some cases. And I think Disney could be one of those names. It's been on my watch list forever. I traded in and out of it a couple months ago. But yeah, anyway. Hey, we're running out of time. So let's get to what we like and or what we don't like. Either one of them, I'll be content with it. GP, you can't use Disney, and you can't use Netflix, and you can't use Tesla. Which one?
Path.
Yo. Yeah, Path U and Hubble looking good.
Big base, ready to ramp. Love it.
Also like Uber. Also like IoT.
We've been on the Uber and the IoT in the past. Yeah.
I also like Vroom Vroom. I love the shakeout, and everyone's like, should I buy here?
VRM, right? Yeah.
Yeah.
That's
The shakeout after the 50-200 cross is one of the most classic things that can happen.
That's been really good for you. That one has. That's been a nice one. Anything you don't like? Anything you want to throw out there you don't like other than energy?
Oh man.
Verizon, you don't like Verizon anymore?
No, Verizon is I'm gonna buy in 5 rungs. So I bought my first rung at 35. I added my second rung today at 31 and change or whatever it was. And I'm happy owning this at this level or even lower with that dividend. So I didn't want to buy it like 50, 60 when the dividend was 5 or 6%, but I'm much happier here. It's at an all-time trend line. It's at a lot of levels that I like. Don't ask me about AT&T because AT&T
Garbage.
sucks. Yes.
Garbage.
But of the two names, I like Verizon. I think we talked about this a couple weeks ago, just building positions. So I knew it was gonna potentially break down, and I'm okay with that. I'm okay
Yeah.
with it. That with me
if I had to choose a telecom, it would probably be T-Mobile, but not a space that I play in. Nick, what do you got?
I mean, I still like Clack and LRCX, but those both broke out today.
I'm gonna have to put you on a no more Clack and LRCX.
Well, I was gonna say ones that haven't gone. I like Net, MNDY, and Snow quite a bit.
Net's got a date with Higher. MNDY Monday.com.
Yeah,
Yeah,
both of those
good.
I think look ready. Ready to
they're
go.
almost the same chart.
Yeah.
Net and Monday.
Seriously.
There's a lot of these. Duolingo look at Duolingo, by the way. FYI.
Yeah. I remember we were talking about that way back when.
Yeah.
Was there another one name that you had, Nick?
I mean, I'm hesitant to say Snow because it's been kind of doing a lot of fucking around.
Jon Snow.
Here, but again, kind of same setup as both Net and
Well,
Monday.
I brought up IGV last week, and all it did is run what is that? 5-7%. So there you go. You're welcome. Just dropping alpha in everybody's pockets.
Yeah. Can we talk about one more? It's a heavily discussed name.
Yeah.
Roblox.
Yeah, Roblox.
Yeah,
that was on my list. That was on my list.
All right. I'll let you talk about that.
I pointed this out to Jason, who's in our chat. I would be interested once it got above like 43, 44. Well, we're at 44, 46. It's broken out all those wicks. So I like it. I like it right here. I like it up to at least $50. At least $50. So that's a name I like a lot. I got to pound my own book on Asana, I think, is just getting started. Very akin to your Monday.com play that you had over there earlier, Nick. Just, it's gonna go. It's gonna go, in my humble opinion, just looking at the chart. Also like Net. I thought that was great, Nick. Net's been a name that I've owned for a very long time. Really like Net. And my last one was I think that was my last one. Yeah, that was my last one. I'm still gonna say Fresh. It's out there with Monday.com too. It's the same pattern, same setup. So there's a lot of these names that have these great setups, I feel like. And I don't like XLE. Sorry, monkey. It's not gonna happen. It's not gonna change my mind. But Roblox and Asana are the two most interesting names to me currently.
Yeah. And so just a little bit about like the way I'm thinking about Roblox here is like, it's been really frustrating for months now. I understand that every time it gets set up for it. So there's a seller there that keeps selling, either trying to get out of a position, and eventually that seller runs out and the stock moves higher. Or there's someone who's keeping it range bound so they can accumulate, and eventually they've accumulated enough shares that it breaks out. So to me, it's still the when, not if, right? So it might be it might be on earnings, it might be after earnings, it might be some random catalyst. I don't know where it's
Shit
gonna go,
goes after 46. Yeah. After 46, it goes.
But eventually, whoever this annoying seller is or accumulator runs out, and then it moves.
Randy's in Fresh. Randy likes Fresh Works. Thanks, Randy.
Fresh looks good.
I know.
Have you been watching UPST, by the way?
Yes. Upstart?
Yeah.
Upstart is why I started watching Path for some reason. I don't know why I always associate them together. And I was like, oh, Path hasn't broken out, but it's starting to see volume come in, right? And you're like, okay, well, if you haven't caught the coins and the SOFIs and the PLTRs, path is potentially that next move that it's coming.
Yeah.
And Upstart's had just what is it, up 500, 400%? It's ridiculous.
God, I know. Yeah. The trade through 40 was kind of like my kind of on a swing setup. Like that's my setup right there. That's why I'm not sure why it didn't like pop up on any of my lists, but
It's a monster.
Yeah.
It's been a monster.
Looks great. Looks good.
Can we give a shout out to all the rate bros?
You can give a shout out to whoever you want to.
Yeah. No, just a shout out to you guys, man. It's been we've been doing this almost a year and a half, and the flexibility and stuff that gets provided to do these podcasts week in and week out is just it's always nice. It just feels grounded, and it feels like a return to normal when life is chaotic. So just big shout out to you too.
Well, we appreciate that, GP.
Yeah.
I feel like Monday has been a night that really works for us. I feel like we brought better discussion on Monday nights, I feel like, and the numbers are showing we're getting more people watching, which that just gives us fuel to keep doing it. And sometimes we all need some type of escape, and we are all market nerds and chart nerds, so it gives us something to shoot the shit on for an hour.
Yep. And if you guys have time, I would really suggest going through a lot of our older podcasts. There's a lot of tidbits and stuff that why we are where we are. And I think it'll help you kind of maybe figure out what you want to accomplish with this stuff. But spend some time when you get a chance,
Yeah,
on the bike or whatever.
yeah.
Listen through.
Watch some YouTubes. We have episodes back to January of 2022. So a month and a half of listen, or a year and a half of listening to us. We've got several. We would do quarterly reports with Cookie Monster, who we love. Cookie is part of our show. He can't be here all the time, but we love having him on when he's available. And I feel like I always learn something new from Cookie, no matter how much he's drilled things into my head. It's just a different perspective. And more than anything, I hope that that's what we get our listeners and watchers is there's 1,000 ways to skin the cat, right? And at the end of the day, we're all sharing ideas with each other, and something might spark a new perspective, right? And that makes you better, that makes you grow. And we're all about the education, and we don't know it all. We don't claim to know it all, but we help each other through and give each other good ideas, kind of like what this whole episode tonight was about. So thank you, GP. Thank you for those kind words. We love you, brother. Glad you were here with us tonight. And Nick, you're okay. You're all right. I love you too. I need you to do something about that beard and ponytail. But other than that, I appreciate doing this every week with you guys.
I do too. I love it.
All right, that's the show. Hey, while you're here, hit the like button for us. Subscribe to our podcast for us. The more people we can get, the more stuff that we can put out there and help promote. We can't put out YouTube shorts yet because our following's not big enough. We've had problems with uploading video to Twitter. So we want to bring you more content. We have it, but we need your help in getting it out to you. So like, comment, subscribe on everything we do. We really appreciate it. It's not selfish in any way. It's just so we can help disseminate more content that you enjoy. So, and tell a friend to tell a friend. Always share when you can. It helps us, get recognized and seen by more people. And it's just sort of that waterfall effect, that cascade of just showing the love and education. But I'll get off my soapbox. Thank you all very much. Thanks everybody for tuning in, and we'll be back at y'all next week with another live